All right, cool. This is episode 4. You want me to do the intro this one?
Number 4, Jeff's going to do it. Let's
All
roll.
right, rock and roll. Let's talk more rock.
I like it.
All right, good.
Great.
Hello, welcome to the Lending Podcast. We are your hosts. This is JB, the infamous guru of mortgage, and I'm Jeff Jones. And we are excited about today's episode. What are we talking about, JB?
We're going to talk about down payment assistance.
Yes, sir, buddy.
And all the programs
Show
out
me
there.
the money.
And the myths. We're going to debunk some myths.
Yes.
We're going to talk about the truths and the benefits and the downsides. So let's dive in.
Good. Okay. I want to buy a home.
Okay.
I'm a buyer, and I don't have a lot of money saved up. Should I wait and save up money over the next year and then buy, or can I buy now?
Great question. Well, you know the best time to buy real estate is yesterday.
Yesterday?
Yes. So we touched on that in episode 1.
I love it.
This is such a great question. I mean, we have so many buyers out there that are toying with this question on a daily basis, right? They want to wait because they want to be in a better financial spot.
Mm-hmm.
Now, we understand if there's credit issues to overcome, some credit challenges, we need to wait because of certain things. But just because we're waiting to get the down payment, I don't think it's a good reason right now. We've got programs, we've got assistance available where we can get you into a home. You do not need a down payment. There are closing costs involved with buying the home. We're going to talk about that. We're going to unpack how to get down payment assistance and also potentially getting your seller to pay your closing costs. You could get into a home for less than 1% down, essentially is what happens. On a $300,000 home, you could come out of pocket with $0 to $3,000 roughly and be a homeowner and start gaining the benefits of appreciation.
That's amazing. So I don't need to wait.
You don't need to wait.
So let's unpack that a little bit, just real quick, if I can. So if it's a $300,000 home, and say somebody's telling you you need to save up 3%, 5% before you start looking for a home. So you're looking at $9,000,
$9,000 to $12,000,
$9,000 to $12,000.
I mean,
before
let's say
you shop for a home.
Before you shop,
or and if you wait a year, that $300,000 home is now what?
It's going to be
3 to 5% more.
320. Yep.
So basically, you kind of shot yourself in the foot. So instead of buying a $300,000 today, now you saved up your $10,000, and now the house is worth $310,000.
And you need a little bit.
So
more
you're actually behind the.
That's right.
You're actually behind on your down payment because of the appreciation of the value of the home. So instead of whereas if you bought today, you could have put that money for the next year into equity on your home.
That's right.
And actually go out with a down payment assistance program.
And there's some great programs out there. And we're going to unpack. Sometimes we go through the down payment options and it doesn't make sense for a client to do down payment assistance. You might end up getting a gift from a family member, or you might do a 401k loan, or there's just all the different variables with your specific financial situation. We're going to dive in. We've done this thousands of times, really make it specific and custom to each client because everyone's a little different. And so let's talk about the most common first-time buyer question that I get. So
little caveat here.
Yes.
We, JB and myself, are both licensed here in Texas. So the programs we're talking about are pretty specific to our state of Texas.
Good point.
So if you're anywhere in the state of Texas, these programs could be for you. If you're outside of Texas listening to this, you have to look into the state-specific programs.
That's right. And each state does have probably similar variances to these programs.
Yeah. And so, go ahead. I'm just cut you off. Yeah.
So the most common question, that was good, Jeff, because that's important to note. The most common question that I get is, I'm a first-time buyer. What first-time buyer benefits do I get? Okay. And there have been some changes in our industry in the last year. We get that question
a lot.
We get it a ton.
Yeah.
And especially even with some of my clients that may be putting 10 or 20% down, like big down payments, and your first-time buyers. And the question is, what type of first-time buyer benefit do I get? And the truth of the matter is, most of the benefits surrounding being a first-time buyer have to do with down payment assistance.
Yeah.
So if you don't need down payment, if you have a down payment saved, there's very little benefit, I should say, for being a first-time buyer in that category.
Okay. The definition of a first-time home buyer, let's demystify that,
That's
is
true.
If you've not owned a home in the last 3 years. Say you've owned 10 homes, but the last one you sold was 3 years ago, just over 3 years ago. You are still a first-time home buyer.
That's right.
According to the programs.
That's right.
So,
Over 36 months ago.
So people think like, well, I had a home in the past. I'm not a first-time home buyer. That's not true.
That's correct. That's not true.
So first-time home buyers you haven't owned in the last 3 years.
That's right.
Good.
Now, if you own a piece of land, you inherited a piece of property, you own some property, so therefore you're not a first-time buyer.
So empty, vacant. So,
but you sold a home 4 years ago, to your point, yeah, you're considered a first-time buyer. So you may be eligible, could be eligible for some of these programs that when we unpack them might be the right decision for you. It might not, we'll see. But let's talk about the options that are available. You come to us and we want to help you get down payment assistance. There are 4 different options typically. There are 2% programs that have 2% assistance, 3%, 4%, and 5%. Now, what does that mean? That is the percentage of the sales price that the down payment assistance will provide you.
For closing costs, for down payment.
That's right. Doesn't necessarily have to be for down payment. It could be for closing costs. So if it's a $300,000 house, 2% assistance obviously is $6,000. All the way to 5% assistance is $15,000. So that's a lot. And most of those programs, a lot of those programs are merged with an FHA loan, and there's reasons for that. But that is a 3.5% down payment. So FHA requires 3.5% down from the buyer. That 3.5% down can come partial from down payment assistance and partial from the buyer, right? And partial from a gift fund. You could have a gift obviously coming from a relative as well. So those down payment assistance options, the interest rates on those programs vary based on the amount of the assistance.
That makes sense. So the more money they're giving you, the higher rate they're charging.
That's right.
Okay.
That's right. And that's where we have to start doing some analysis. We always do some analysis to find out, will the 2% assistance get you what you need to get the home bought, or do you really need the 5%? Because you're going to take a pretty big interest rate delta. And on quick math, it's about 1% differential on rate. So if you take 2% assistance versus 5% assistance, that interest rate delta is probably about 1%, which is a couple $100 a month.
That's a lot in a monthly payment difference. So you really need to know what that is. And if we're on the line and you only need 2%, then just use the 2%. There's another variable of it becomes certain programs, it becomes a second lien on the home, right? So if you only get a 2% loan, it's basically a forgivable loan. Like if we're talking about the T-Check bond program, that would be a 2% forgivable loan that goes on title, goes as a second lien, and that is there for 3 years, right? If you do 3%, you have a bigger loan on the second lien on the property. 5%, a bigger lien on the property. If you try to refinance or sell the property within those 3 years, you have a bigger loan to pay off.
That's right.
It's forgivable after 3, but it's not prorated.
That's because it's a zero interest. It's just a lien on your property at zero interest, zero payments. It just kind of sits there to be paid off if you refinance or sell, like you said, within 36 months.
So, and it's the same amount of money that they gave you, right? So the money they give you just sits there as a lien, and then is forgiven at the 3-year maturity.
Yeah, and so it's like only take what you need, right?
Yes,
so it's like take what you need. It's like a buffet. Only take what you're going to eat.
Because that digs into your equity.
That's right. So when we look at those various options, the component of the interest rate coupled with the buying power makes that math equation somewhat complex for some of our clients. So again, the more assistance you need or get, the higher the interest rate, the higher the payment, the less home you can buy. So we really want to make sure you're only really taking the amount that you need, because we want your interest rate to be as low as possible. These are set interest rates by the program. These aren't something that are going to vary from lender to lender. They're all blanket interest rates based on the program. And let's talk about the different programs. So the 3 main programs that we see are TSHAC, which is Texas State Affordable Housing Corporation. That is a 501c3 nonprofit here they're based here in Austin, but they lend anywhere in Texas.
Great program.
Awesome program. We love it. It's probably the most common one that we use.
Right.
And then you have TDHCA, which is Texas Department of Housing and Community Affairs. The TDHCA program and the TSHAC program are very similar. There are some
Very
nuances
similar.
and some
Yeah.
small differences, but they're very similar with the different, 3%, 4% assistance, 2 to 5% assistance, essentially. And then you have a program called SETH, which is Southeast Texas Housing.
Mhm.
And that program is available outside of Travis County because
It's-
Travis County has its own down payment assistance.
Yeah, and its geographical region
It
is
is.
it's in its name, Southeast, right?
Yes,
So it has to be in certain counties,
that's right.
and it has to be in their populous area that they're serving at that time.
Yeah.
So it does change quite regularly.
Now, here's something that a lot of clients don't know, and agents may not know this. You do not have to be a first-time buyer to get down payment assistance.
Right.
So there are some programs. Now, the ones we just mentioned do have some first-time buyer requirements, but we have other programs where you do not have to be a first-time buyer, and you can have a cosigner. You could have mom or dad cosign with you and get down payment assistance. And typically, the credit score minimum is down to a 600. So we have some programs out there, and you just we touched on this the first episode. You just don't want to disqualify yourself. Have the conversation because you may not even know what doors can open up to you. And to be a non-first time buyer, have a cosigner, credit score to a 600, and be able to get down payment assistance, that's amazing.
Yeah.
There's some really great, home ownership programs that are just encouraging our buyers to get out there and buy right now.
It's wonderful. So, I mean, we have, man, I want to say over 250 different programs that you and I have access to.
Right.
And the reason why we're highlighting these 4 or 5 is because a lot of people are taking right now to wait to buy. And we are trying to re-educate people on actually it's a really good time to buy. It's a buyer's market. You're able to have your realtor negotiate really well on that property. And one of the things that can get you is what we call seller concessions. Now, the last time it was a buyer's market with heavy seller concessions was here in Austin was 5 years ago.
That's right.
And that's when I bought. And it was price drops at that time and seller concessions. And now we're seeing a very similar kind of trend right now where prices are solidifying, but seller concessions are still very real.
They are.
So
I'd say
unpack what those do for you.
Well, I'd say we see them on over half of our contracts. There's
That's
the
a
seller
lot.
paying some or
This is
even all.
February of 2024, just to date this time
That's
right now.
Yes.
So
And we're seeing a lot of sellers pay closing costs. Again, it depends on the individual situation. If you have a house that maybe has been listed for a little bit of time, and I say a little bit of time, maybe 30, 60, 90 days, you might have a seller who's a little more motivated. And in lieu of a price drop, they're willing to pay some dollar amount of seller concessions. Now, different programs allow for different amounts that the sellers can pay.
Yeah.
So we'll help you through that.
Yeah, and I want to interrupt a little bit because if you are a listing agent and your property is sitting on the market and you're wondering if we should do a price drop, please talk to a lender and see what seller concession offerings will get you compared to a price drop and how much better that scenario might be for the next buyer and be way more enticing.
That's a great point.
For a buyer.
Great
because
point.
seller concessions can reduce a monthly payment way more than a price reduction.
That's right. And what does seller concessions can cover? Buy down points depending on your program, so they can buy your interest rate down. They can pay for things like appraisal. They can pay for things like insurance, taxes, title policy, of course. And so there's a lot of costs that are associated with the loan. Various loans have varying costs. And so you've got to have an expert put this package together for you.
Right.
And communicate with the buyer's agent, communicate with the listing agent, put all those pieces together so that the financing options for our buyers are maximized, right? And you're using your cash in a very strategic way. And that's a good segue to talking about maybe why you wouldn't do down payment assistance, because I do have some clients that come to us. They've got some savings, they've got some 401k, they've got mom or dad or a relative who can give a gift. And that's a huge blessing, right? If you're in that spot, or maybe some money coming in from any various number of things out there. And so we need to know that full picture, because when you're talking about a $300,000 house, 3.5% down, it's only $10,500, right?
Right.
So it's $10,500. All of that could be covered by DPA, the down payment assistance, or we can piecemeal it from a couple sources. We may have $3,000 in savings. We may have a $5,000 401k loan,
Right.
and mom and dad can give $3,000 or $4,000. And so when we look at that as an option, what does that do? And it's a twist on the down payment assistance, because when you put your own down payment down, you then have more control over your terms, over
That's
your
right.
interest rate. And the down payment assistance programs have set interest rates. So we have to compare, if we do our own down payment and we have a down payment assistance program, what do those rates look like? What is that purchase power?
Right.
What does that do to our purchase power? Because by putting your own down payment, you might be able to buy 50,000 more house.
Yeah.
Because the payment is that much less.
That's right. And I think that's good to note, if for anybody that's listening that wants, like, I want to do some online research. If you just Google here in Texas, Texas down payment assistance programs, one of the top ones will be like a T-Shack.
Right.
If you click on their website, they're going to show you the rate. So there's a way to get to the rate through like the lender information, rates today. That rate is the same rate any lender across Texas can give you for that day.
That's right.
So if we reserve it for that day, we all have the same rates. It's not a rate you can buy down, right?
Correct.
So you're like, well, what if I see it says 7.25. What if I want to buy that down to 6.875? You can't. So those rates are locked and steady. The only change you can do is how much assistance increases the rate. Also, there's a quick little eligibility quiz. Am I eligible for it? It's 4 questions. It's wonderful. It's easy. You can see if you qualify just from the website. So that's a great resource.
That's a really good point, because some of the programs have income limits.
And they're county by county.
And they're county by county. And then some of the other programs that we have do not have income limits.
And some are job specific.
Mm-hmm.
For if you are, Homes for Heroes, and the down payment assistance program is going to be, first responders, teachers, things like that. So there are even industry specific programs.
Yeah, they're really amazing. I mean, we do a lot of down payment assistance programs here. There are some downsides, and those downsides are the timing that you have to hold the house. You've got to have it 3 years. You got to have the loan 3 years, right? Mm-hmm. Unless you are okay paying that back. Life happens. If you need to sell the house or you need to refinance for whatever reason, you've just got to know you got to pay that back. And that's something I don't think a lot of our down payment assistance clients out there knew before they closed. We've had clients come to us. We didn't do their financing, and they've come to us and said, we didn't know we had to pay back this loan. We want to refinance, and we didn't know we had to pay back this loan. So it's really important that we're educating our clients, agents, lenders up front, letting our buyers know. So that's the purpose for this, is to let you know that it is a great service. It is, however, a small downside where you've got to pay that back in the first 3 years. And the other downside probably would just be that the payment and the interest rate might be a little higher. Again, there's no payment or interest rate on that second lien, on that grant amount that you're getting, that down payment assistance amount. But you are paying, in some cases, a higher interest rate on the funds that you're on the loan, because you're receiving down payment assistance funds.
Good.
So we want to just unpack all that and put you in the best loan. Our job's to put you in the best loan. And sometimes, in many cases, the best loan is a down payment assistance loan, which we're thrilled to do, because Jeff actually has one closing this week.
Yep.
And it's 4% assistance. No, they did.
So we got amazing seller paid concessions. And so we were only needing to do 2%.
That's right. So they did.
Which kept their monthly payment low and within their means.
And the interest rate, if I'm not mistaken, is below a market rate right now.
It is below market rate.
So there are times where the down payment assistance rate is better than what you can go out and get in a regular mortgage.
And they're getting 2%.
Yeah, they're getting the down payment assistance money. Right. They're getting seller to pay all their closing costs.
And so because they're using the 2%, and it's a 3.5% down, they're closing the home with 1.5%. That's right. That's all their money out of pocket they have to spend.
Which was about $5,000, I think.
Right.
Roughly, give or take.
Right.
So for $5,000, and you don't have a payment for almost 60 days.
Right.
So they're skipping the next month's payment. So if you're putting some money down, these are all those components that we talk about, right? Where you can play a little bit of cash flow game. If you have a little money to put down and you're not going to make a mortgage payment for 60 days, how does that impact you? And we know you have moving costs, and we know you have some other expenses that you're going to incur. We're going to unpack all that as well.
Yep.
So That's great. Well, what else? Is there anything else we want to cover on down payment assistance?
Well, man, I think that the short version is don't wait. See what your lender can do for you and provide you with options. So a lot of it is going to be I have no idea if now is a good time to buy and if I qualify for down payment assistance. That's when you come talk to people like us. They're the industry professionals and can get you that good information to make good decisions. Because you might not have to wait. Maybe you could be in a home in 30 days.
That's right. And if there's
And these do
credit,
close within almost the same time frame as a normal loan.
they do.
Just so
And
you
when
know.
that's true. And when you're writing the contract, it looks no different to a seller.
Right.
A seller is not going to know that you're receiving down payment assistance. It's an FHA loan, it's a conventional loan, it's a VA loan. Whatever your loan type is, that's what it looks like on the contract.
Right.
So it's not taking away any of your leverage as a buyer.
Yeah.
And there's no issues necessarily with communication because we know we already have the loan in that approval status. All we need to do is apply for the DPA, which takes 24 hours, 48 hours to come over. So it's a very similar process to a normal underwriting approval.
Right.
Yeah. A few extra documents to sign.
Love it. This was good.
All right.
This was a quick hit.
Yeah, it was.
I think we did good.
Awesome.
Well,
We'll look forward to
go
seeing
ahead.
you on the next episode.
Yeah, thank you for tuning into the Lending Podcast. JB and JJ, we're here for you.
Take care.